As a business owner, one of the more expensive expenses that you will incur is insurance. There are a number of insurances that will apply within your business, and in this video we look to unpack what those are and the considerations that you need to take into account. First and foremost, I think it's important to understand some of the basics around insurance. Firstly, the insurance is not to enrich oneself. The insurance is put in place to restore the insured back to the position that they were prior to whatever loss has resulted. Another important concept that people need to remember is that if you are underinsured, the amount of the payout will be less than the cost of the asset that needs to be replaced. It is therefore vitally important that you make sure that the insurance cover you have in place, whether it's against assets, stock, whatever it is in your business, is sufficient. Otherwise, when it comes to payout time, you could land up coming up short. The last point, and very, very important also, is to ensure that the relevant insurances include the VAT. It's a 15% charge. It can make quite a big difference when it comes to a payout if you have insured at VAT exclusive values. So as a business owner, what are some of the insurances that you should be looking at and that we believe would be quite key in your business? First and foremost, obviously there's asset insurance, which I'm pretty sure everybody on this video is familiar with. The most important thing there, and we've touched on it as before, is to make sure that all the assets are covered at the correct value. Secondly, let's look at stock. Stock is a big number generally in a business, and some of the things that you really do want to watch out for is what does your goods in transit cover look like? We have seen instances with customers where they are transporting goods and they are not adequately covered for the value of those goods sitting in the back of their vehicle. When you start out at a business, you may be transporting a certain value, but as you start to grow and your business gets bigger, the value sitting on the back of your truck could also grow, and sometimes exponentially. So watch out for that. The other obviously point again is make sure that your stock cover is sufficient to cover the stock that you maybe have sitting in your warehouse. Right, now we're going to look at the business owners and the key individuals in the business and some of the covers that would apply to them. This is often very, very topical, and I think the two phrases I'm going to mention to you now will resonate with most business owners, and that is buy and sell insurance and key man insurance. So what is the difference between the two? Well, first and foremost, buy and sell is an insurance policy that is put in place to help partners buy each other out in the event of the death or disability of one of the partners. It's a funding mechanism for that transaction that enables the remaining partner to buy out and pay the estate for the deceased or disabled partner's shares. Very, very important point to note is that the insurance policy is merely a funding mechanism. You should have a contract in place that forces the sale of the shares in the event of somebody passing on or somebody becoming disabled. Without that contract, you could sit exposed that the person receiving those funds does not execute and buy the shares. Key man is generally a policy taken out by the company, not necessarily just on a director or a shareholder of the business. It can be taken out on key people within your operation. And the purpose of this insurance is to provide money to the business in the event that something happens to them to help it continue to pay the operating expenses. Simple example, you have a key salesperson, and should something happen to that person, if the sales had to drop off, how would you continue to pay all the costs that are sitting in the operation because your turnover or your top line takes a bit of a knock? So when we start getting into manufacturing, there are 2 or 3 insurances that we believe are vital and need to be considered. The first one being machinery breakdown insurance. If something goes down on a key machine, is it necessary for you to have insurance in place to cover that machine? Sometimes you may have 2 or 3 machines and you won't be impacted, but other times you could potentially have a machine go down and it could have a significant impact on your revenue line. Another insurance to possibly look at is business interruption insurance. This insurance will cover events that interrupt your business and result in a loss of profits. Lastly, just looking at your staff and types of insurances which you may consider for them. Medical aid, often loosely referred to as medical insurance sometimes, is something that you may want to look at, as well as pension and provident fund, which would have life insurance attached for the employees.